Welcome to the last Sibos Today, and we start the final film in our series, The Big Interview. My colleague Nadine Dereza met with Emma Loftus, Head of Global Payments and FX at JP Morgan.
Well, I'm joined by Emma Loftus from JP Morgan, and your profile within the banking industry is pretty senior. So I'm just wondering, how can we attract more women into banking?
Very, very important topic. I think it starts at the junior level. When I think about how I started in banking and I think about how I've progressed in my career, a lot of the support that I've gotten over the years is mentoring by other senior women. So I think starting at the very junior levels when women are joining the bank, talking to them about the benefits of running operating businesses. I really want to see more women running operating businesses, how we can support them throughout their careers. Some of the movement and the disappointment we've seen as women progress from maybe the VP to an executive director level have to do with their life circumstances. So women are having babies, they're getting married, and it's really how do we support them throughout those life events so that they feel that they can progress their career through
and
the
keeping
firm.
That retention as well.
Absolutely, absolutely. We want women to progress to senior levels, so you have to support them throughout that process. Talk to them about, okay, if you have a baby and you leave for maternity leave, how can we bring you back in a way that you're not interrupting your career, you're continuing that forward momentum. So it's mentoring, it's actually targeted programs aimed towards women and how we can help them through those life events. It's really talking about the benefits of operating businesses, and I think all of that together can help us. But we have to lead from the front too, and we have to lead from the top.
And are you leading from the top? Are there enough people within leadership roles for women within banking? What's the problem here?
I think at JP Morgan, what we have organized is a women's network. So I'm a member of I'm part of the investment bank at JP Morgan, and I'm the Treasury Services representative to the Women's Network. And what we work on are specific programs for skills development for MD and ED level women, exposure to senior executives, sharing our history and how we've progressed in our career, just in hopes that it will give someone hope that they can relate to that.
And what impact is that having?
You know what, I'm energized. You can tell I'm getting really excited about this. I think it puts it in context that people can see in the leadership team people like themselves. So if I share and someone asks me about work-life balance, that's the question that comes up all the time. How do you have work-life balance? I'm very honest. Sometimes I have a lot of balance and sometimes I really don't have a lot of balance at all. But it's how do you manage those times when you're out of balance so you don't tip over?
It seems that role models are key here to give people the confidence that they can achieve and actually progress up that pipeline. So it sounds like you're a good role model. Are there enough of you around?
Oh, well, thank you very much. I think I'm inspired by role models. I look for people who I think can help me understand how I can fit into progressing my career. And I think we need more people who really care, who are going to reach down and pull up, give of their time, mentor, help guide, give advice, and really, just spend time helping people move forward.
Well, that's really interesting to hear. One of your specialities, obviously, is payments around the world. And we're seeing a real shift, aren't we, with the use of technology, particularly in the payment space. Do you think banks should be embracing this technology? There seems to be a little bit of a tread carefully.
Yeah, I would say absolutely. I think there has never been a better time to be in the payments business. Everything is shifting. The industry is shifting. Technology, innovation, disruption. Our clients are getting more demanding. If you're resistant to those changes and adopting technology to help you really innovate, to better address those challenges, you're going to be left behind. There may be some resistance, and I think what many people are sensing as resistance is really just we're not quite sure yet how it fits in.
So how much is this resistance? How much is this adding as a block to really progressing?
Right. Well, you mentioned blockchain. I have, throughout the conference for the past 3 days, I have not had a conversation with a bank where blockchain hasn't been part of the conversation. What we are trying to figure out is where does it fit in? So in the payments business, Absolutely not resistant to any type of innovative technology that we think can actually improve the efficiency of our operations, help us lower our costs, provide better service to our clients. But how blockchain, which is so radically different from how we process today, can help us really needs to be proven. So we're doing a lot of collaboration amongst ourselves. Well, what are you doing? What are your use cases? What are you thinking about? Haven't quite figured out what that is. And consensus across most of the banks that I talk to are we're experimenting.
Well, you talk about collaboration, and that leads me on to my next question. Do you think financial institutions are collaborating sufficiently with those digital and those fintech companies to make that impact?
Right. I think, you know what, if I look back years ago, I would say the banks were very defensive. You know, this is our space, you know, keep out, you know, we know what we're doing. Today, because the disruptive payment providers in particular have really carved out a niche in what we consider to be our patch, I think we've figured out that we need to work with one another to be able to keep and remain relevant.
Is the industry scared?
You know, I wouldn't say, it's hard for me to say scared. I almost want to say angry. You know, hey, this is our space. We need to reclaim our space. And working together, particularly around aspects of the business where there isn't any competitive advantage in one bank doing something different than another, like so sharing standards, giving complete visibility on how we process transactions, those types of things where there are opportunities for us to cooperate. I'm seeing much more industry collaboration than ever before, particularly in the venues like Sibos and the committees that SWIFT sponsors that create areas where we can communicate and be pretty open with how we're managing our businesses in a way that's not non-competitive.
Do you think the disruptors in a way have done you a favour though by making you
Probably.
Look at your business models and think actually we've been quite complacent over the years.
Yeah.
Yes, we're highly regulated, yes there's lots of compliance, but in fact why change it if it works? It ain't broke, don't fix it. And some of these disruptors have come along and it's been a real kick up the backside.
I think the wake-up call for the banks are how quickly that this has happened. For those of us who work in a regulated industry, in a banking industry, fast has a different concept. You know, fast for a disruptor is, tomorrow. Fast for us is, getting something done next month. And that has been, it's quite a shock to actually have to really understand when we want to do something quickly, it's got to be really quickly. Hard for banks to move at that speed, but good for us. The industry is changing around us. We have to speed up.
There's been a lot of talk, isn't there, about cryptocurrencies. You already mentioned
Right.
Blockchain and also the use of blockchain then to settle payments. Do you think this will be a reality in the near future? And if not in the near future, when?
For the payments businesses, I see things a bit further out because the use case for how blockchain can really enhance and for the traditional payments business, I think we're still trying to figure that out.
Is it the lack of regulation? Sometimes you have too much regulation. Is it because of the lack this time?
So, Bitcoin and cryptocurrency, that's one issue. And I think from a bank perspective, that lack of regulation, given the fact that we have obligations for full transparency, particularly around value transfer, it's going to be difficult for us to sort. But the technology that's facilitating that funds flow, very interesting for us. I think how it's going to apply to our business is a little bit further out, but if you think about a distributed ledger, it's all about information. So those businesses that are information heavy, perhaps require paper to travel, or multiple banks to coordinate and communicate with one another to facilitate a transfer. Thinking about harmonizing that through a shared ledger, that seems really very promising.
Are you worried about the cost of implementation and those potential risks involved? Is that holding things back at the moment?
For us, cost, and that's what I talked to my technologists about. I said, if blockchain can fundamentally change my cost structure, we absolutely have to figure out how we're going to integrate that. So are costs a concern? Costs are always a concern, absolutely always a concern. But honestly, if it's an investment that will actually substantially transform my underlying cost base, we have to do it. One
of the key themes at Sibos has been real-time payments. So for foreign exchange, do you see that a marriage between foreign exchange and real-time payments working well together?
Absolutely. So even if you even break it apart, so if we talk about domestic transfers, no FX involved, cross-border transactions, no FX involved, and then cross-border transactions with FX, I think the whole movement to real-time settlement within each country, and then the view that eventually all of those real-time payment systems will be interoperable, is incredibly exciting for the industry. A lot of talk about real time. Everyone asks me, oh, what's going on in the US? I wish I had a crystal ball. There is a lot of work going on in the US, how we achieve a faster payments experience for domestic transfers, because as you know, we have a high value transfer system, we have a low value transfer system, and this faster payment scheme, what is that? Is that a new system altogether? Those are the things that the US, the problems that the US banks are struggling through today. But we absolutely see a future where when our clients send their transactions to JP Morgan and really leave it us to determine how we settle those transactions, that a faster payment settlement is actually a viable alternative. And so what we're talking to our corporate clients about is really just send us all your payment instructions, let us know when you want it settled, how much you want to pay for that transaction, and when you need to achieve final credit to the beneficiary, and then we'll figure that out. Is it an urgent payment? Is it a wire? Is it a cross-border wire? Is it a domestic transfer? It's just another option.
Now, the dollar's been king, hasn't it, for many years? I'm just interested to see your thoughts on the Chinese currency's meteoric rise in terms of payments and trade currency. So do you think at the moment that's brought that currency ever closer to being mainstream than ever before? It seems to be knocking on the door of the power of the dollar.
Right. Well, the implementation of SIPS this week, so the new cross-border RMB settlement mechanism, it's a step in the right direction. I think if I think about dollar flows globally, the intra-Asia flows that are denominated in dollar today, the expectation is eventually payments to and from China will be denominated in RMB. So we absolutely see that this is coming. When we talk to our clients about supporting them for their payments requirements, the view is that the services that we provide to clients in dollar today, we want to support them in any currency. So dollar, euro, RMB, yen, really whatever currency they choose to settle their underlying transactions, what we want to do is be able to service those requirements in a similar manner, depending upon where the client does business with us.
Just a quick thought on
Sure.
risk management and liquidity reporting in particular. There's obviously that need and requirement that you need a significant amount of liquidity, Basel III you can point to. What's your thoughts on that?
Very, very hot topic now. I think if we think about where the industry is right now around BCBS reporting and the requirement that we have with the regulators to be able to report our intraday use of cash, a lot of the bank's systems weren't equipped to be able to report at the level of granularity and timeliness that the regulators have required. What we've been doing are building capabilities for clients who use us for dollar services, because dollar is such an important currency to many banks, are creating advising capabilities so that if they're building systems internally to track intraday usage, they can just take an advice from us and feed that right into their back end. Interesting circumstances we're in right now are the regulators haven't largely defined what that compliance reporting needs to look like. We're, of course, designing what we think is probably going to be an appropriate model. The hope is that when the regulators do actually get to a firm definition of what it needs to look like, it'll hopefully look a lot like what we've been designing. But we've been having a lot of conversations about, what is JP Morgan doing? How do you feel you're going to address this requirement? So it's a lot of thought leadership, sharing best practice, being very open with how we're managing our reporting requirements, and then really sourcing from our clients, what do they think about those solutions? What do they see happening in their local market? The use of intraday liquidity that for a long time was really looked at as perhaps a free resource, really isn't a free resource anymore. The regulators want to understand at any point in time, how does a bank look at their cash position, and do they have enough cash on hand to really weather any stress circumstance? So that's what we're probably for the next few years going to be supporting clients with.
Well, Emma Loftus, an absolute pleasure to talk to you. Certainly a fantastic role model within the banking industry. Thank you.
Thank you very much.
Just heard some great insights there into the changing face of the payments landscape. Now joining me here on Sibos Today, I have Ricky Lim from OCBC, a Singaporean bank, and Hendra Lembong from the Indonesian bank CIMB Niaga to discuss today's ASEAN theme. Good afternoon, gentlemen. Thanks for joining us. Ricky, I'm going to start with you. How important do you think ASEAN integration is for the region?
Well, Steve, I think when you talk about banking integration, I think it kind of like means different things to different people. But I think to me, banking sector integration means three things. I think first of all, it means an increased access to markets. Secondly, as a result of that increased access, you would get increased competition, increased opportunities as well. And thirdly, it also means increased collaboration between banking partners within that sector. Mm-hmm. Now, to give you an example, take Myanmar as an example, a relatively new entrant, a market that has just recently opened up its banking sector to banks. So for OCBC, we are quite privileged to be one of the 9 foreign banks to have recently opened up a branch there, having been granted a banking license. Now, clearly, it means business opportunities for us, but we don't necessarily just see it as one where we have the opportunity to do business. But we also see it as a chance to help develop the banking sector. Mm-hmm. For example, in the last 2-3 years, we have been organizing study trips for senior officials in both the state-owned banks and the privately owned banks, out to Singapore, out to China, out to Hong Kong, for them to study and understand how banks operate, right? Also, we have done things like organizing trainings, certification programs to help the banking professionals look at trade finance to understand treasury products and stuff like that.
And really the purpose of all that is to allow you to better understand each other, so to speak, right? Because every country has slightly different ways of operating. Again, from Indonesia, I mean, your experiences, Hendra.
Yeah, I think the ASEAN integration has been key from Indonesia perspective. I was reading the Oliver Wyman report the other day that showed the top companies in Singapore, Thailand, Malaysia. I think about 50% of them have their earning come from overseas, outside their home country. And guess what? The beneficiary of that is mostly Indonesia. I think because of the proximity and the big market of Indonesia. So from our perspective, as one of the largest local bank in Indonesia, we see a lot of investments from the ASEAN companies into Indonesia. So if we look at the business growth from the ASEAN companies, it outgrows other companies that we have in our customer base. So it's been really good to see a lot more Asian companies expanding overseas.
And you feel that this is a result because of the relationships you have with these countries? I mean, we're all neighbors in that sense. In ASEAN, we're all relatively close to each other. Is it about the right kind of banking relationships between or within ASEAN? Hendra?
Yeah, I think the fact that similar like OCBC, CIMB also has a good presence throughout ASEAN countries, because we're very big in, of course, Malaysia, Indonesia, Singapore, Thailand. So, we have relationship with these companies and continue to serve them well as they expand overseas. So it's great. It's great for us.
And I think just to add to that, I think if you're talking about the context of building banking relationships in the context of AEC coming up pretty soon, if we were to look at how Asian banks have been expanding and growing, I think we've been pretty prudent in how we grow our market presence. Clearly, after the 1997 Asian financial crisis and the more recent 2008 global financial crisis, I think the banks do this rather well by following investment flows, by following trade flows, by following where private wealth takes the market to, right? So as banks, we know that we cannot be anywhere, and neither do we want to be in every market. So I think that the right way to do this is to really leverage on complementary banking partners in markets where you have limited presence or where you don't have presence. And that's how we bring local solutions, local capabilities to our customers, even in markets that we don't necessarily operate in.
So how strong are these ties between the countries and the banks, in particular? Because again, here you're talking about collaboration, working together, and often people will say, but you're also competitors at the same time. So how much do you give and how much do you take? Where do you think we're at with that, Hendra?
You mean between banks or between banks and companies?
Between banks. I think between banks first in the financial industry.
Yeah, no, I think banks are used to with collaboration, and of course SWIFT certainly help bridge and makes this collaboration easier with the standard messaging. But in terms of the banks, we all know each other's sweet spot, right? And we know each other customer base and customer focus. So we will always try to focus on where we can work together and complement each other, and then acknowledge that there are certain areas where we cannot work together because we're competing head to head in those segments, right? For example, in the case of the global banks, is very clear. We collaborate. If it's a US banks, then we will help their clients in Indonesia, because we don't have a presence in the US. Right? If it's the ASEAN banks, then we will look at, let's say, some of the Thai banks. We do collaborate with some of the Singapore banks who do not have a big presence in Indonesia, and vice versa.
Do you agree, Ricky?
Yeah, I think the keyword is complementary. Yeah, so in cases where it works for you, in cases where it doesn't quite make sense, because we compete. Yeah.
What about, during this meeting here at Sibos, also regulation has been one of the words that has been talked about a lot, have you found that regulation within the countries has allowed for better integration within ASEAN, or is that proving to be a bit more of an obstacle, making it challenging for, institutions and countries to work together? I mean, we won't talk about countries, that's on the political scale, but institutions in the financial industry. Has regulation made it more accessible so that it's easier for you guys to work together? Ricky?
Well, I think, first of all, we have to recognize that ASEAN as a group is a very diverse group. We've got the little bit more advanced economies. We have the more sort of new developed economies. And as a result of that, I think we can expect that the regulatory framework would be quite different. And as a result of that, the way in which we participate in those markets would have to be different as well. So I think in part is due to the differing sort of social, political, and economics of stage of development of each of the markets. Yeah.
But at the same time, does that mean it's in a way making it a little bit more challenging? Do you have to go to regulators and say, we can work this way, and then they'll say no? Or are regulators coming to you and saying, how can we help you?
Yeah, I think honestly from what we see, the regulators still very much focus on their own country, on the banking sector especially. And that's, from banking perspective, is good and bad. Yes, we all want to see advancements in country central bank working together and improve payment systems so the collaboration can make it easier. On the other hand, for banks like us who have deep presence in all these ASEAN markets, we have the opportunity to take the complexity away from the clients, right? So they don't need to worry about each individual regulators. They just deal with one bank and we standardize that for them. So that's the value add that we see differentiate us. But we certainly hope that in the future we see more cooperation, because I think that will help ASEAN as a group grow faster together.
All right, gentlemen, one last question. So if you had a wish list, you had a dream of how we could better work as an integrated community in ASEAN, what would you like to wish for? I mean, I've given you a chance now, a bit of a crystal ball gazing, and just, what do you think will be the ideal situation for our current economic environment? Ricky, you want to go first?
Well, I think, going back to that earlier question about the reality of the fact that we're dealing with a very diverse group of countries, I think if you ask me what we could really do better, it's really about the banking sector coming together and look at core areas in which we can really cooperate. And I think at the back of that is about supporting our customers as they traverse countries, as they regionalize. And I think as a group, the banking sector has a lot to play if we can do this well, because really it's about supporting customers who operate in different countries, right? So I think that there is clearly a core area in which we can cooperate, leaving perhaps the other peripheral areas that we still have to work, on.
Okay.
Yeah.
Mahendra?
Yep, I mean, I fully agree with Ricky. From banking perspective, I wish that the central bank or the regulators work together, for example, making it easy for business to buy and sell goods to each other. Right? I think SWIFT has come up with BPO, the bank payment obligations. I have high hopes on BPO because the shipment between ASEAN is shorter. You send goods, it takes only 1-2 days. So you need BPO so that things can be done faster. So I think SWIFT can help the banks. Second thing, on the banking side, we have a lot of opportunities on the supply chain side, right? To ensure banks can help each other, not only supply chain finance, but making it cashless. At the moment, it's still a lot of paper-based, and even within the country, there's still a lot of opportunities for banks to make it cashless. Now, as we get into more cashless society, then the adoption of technology will be a lot easier, and then the integration in ASEAN will be a lot more efficient. I mean, I spent 6 years my banking career in Europe, based out of London, so I've seen how the European Union has done, and I think I would hope the AEC and the central bank also be more aggressive in accelerating some of those plan execution, so that it can accelerate again the growth of the ASEAN companies. I think it's important that they be more aggressive and proactive.
Okay. Well, on that note, it's almost about time for us to say goodbye, because that's it for Sibos TV. Thanks so much for your company these past few days. We hope you have enjoyed the conference, the meetings, making friends, and also Singapore. Enjoy the plenary. Goodbye. Safe journeys home.